Hello everyone, hope you guys are doing well and had a great weekend. So on the screen right here, the very first piece of news we have is the retail sales from New Zealand. That's the very first piece of important news that we have this morning. And by the way, today is the very first trading day, the 4th of May. The retail sales in New Zealand is doing well. Figures shows that it outperformed the forecasts, which is supposed to be negative, but apparently we have a pretty great retail sales this month, mainly on electrical and electronic goods, followed by recreational goods, saying that many were enjoying the ability to travel around the country for camping, water or biking activities, and opportunity to attend large events such as the America's Cup. Just hope that things don't get out of control. Just hopefully they will be able to enjoy what they have right now. So coming back to the chart of Kiwi against the US dollar, I'm just going to go through the weekly analysis or weekly forecast that I have for the Kiwi against US dollar. And my bet is that I by accident I actually post it as private for all of my weekly forecast this week. So don't worry, I'll just share it right here so you can get to see. So what I have shared for Kiwi dollar is that it is a key focus for the week because of the RBNZ rate statement and its monetary policies due this week. And so while the market is expecting rates and monetary policies to be unchanged, Kiwi dollar will most likely experience an extended period of ranging markets as it may continue to face strong resistance at 0.7450, which is a major equilibrium level. So that this is the level. Later on I'll show you. And the price also very likely to trade within the range of 0.73 and 71 if there's no significant change to the central bank's decision. And so we'll have to wait for the RBNZ statement to be able to find out more. So the equilibrium level, which I was talking about, is this 0.745, as you can see. So as you can see, this is a very important level for Kiwi against US dollar, because this is the equilibrium, strong resistance and strong support back then. So if the price is able to go up and break through this level, then we will definitely see a stronger rally in Kiwi against US dollar, and which is why, because it is already right at the top, very near to this price, and and as of now we are seeing that it is ranging between 0.73 as well as 0.71. So this is the range that we can look to trade in the beginning of the week. After the news for the retail sales has been released, the price was very little change, and apparently it is ranging. Okay, highs are getting lower while lows are also getting higher, so it's like a symmetrical triangle. And since we have a positive data in the very beginning and right now it's at the bottom of this consolidation, we can definitely go ahead and try to buy at this point of time, and just aim to take profit somewhere at the top of the of this symmetrical triangle pattern. So very straightforward for Kiwi against US dollar this for today, but in any case, going forward, we might just want to trade within this range, unless when it comes to the rate statement, there's a huge change or shift in their decisions, maybe because of inflation right now that's getting very high. Then we can then take a look again and re-analyze the markets depending on what's the movement. So that's for Kiwi against US dollar. Next, I want to talk about the dollar. Well, let's go to the weekly forecast I have. Well, let's talk about gold right away. So for the gold, this week Gold continues to show growing demand as the market falls deeper into inflation. So inflation-related economic data from manufacturing PMI down to retail sales are printing fresh high, and some are making history. So gold for many centuries has been the best storage of value and most regarded safe haven asset in times of fast rising inflation. And the price managed to break and close just above the equilibrium level of 1850 right here, reaffirming gold's bullish trend. So this week we expect the gold price to continue climbing with potential jump straight towards or straight into the 1950 supply zone right here. Okay, and however, not to exclude the possibility of a sudden pullback should gold fails to gain enough tractions and force in the very beginning of the week. Just add on, we will watch 1800 for another buying opportunity. So now we will take a look at gold. So many drawings. So for the gold right now, we are still seeing it still slowly climbing upwards. So lows are still getting higher, highs are also trying to get higher as well, and it is still within this rising channel, which is channeling out of the previous rising channel as well. It definitely seems to me that gold could be ready to jump at any point of time. It could be today, later on in the US session, it could be tomorrow, somewhere along the in this week, in the earlier parts of the week, I believe so, because if it doesn't, there's a possibility that there might be some sell-off, and if it does, we can wait for the pullback, somewhere to the bottom of this entire range right here, which is also right at the bottom of this rising channel. So this will be a great price to buy the gain, which is 1860. But if it breaks below the channel, then we'll have to wait for a better support to buy again, which is 1800, somewhere right here. As you can see, the resistance and support level within this region, and of course where all the moving averages are coming together. So that's my view for the gold today, for this week. And just for today, if the price is able to just simply pull back and reaches somewhere right here, I think we can definitely consider to just go ahead and buy, because we I do expect that the gold may jump at any point of time all the way into the 1950 supply zone, right, which I have been talking about for quite some time. So that is for the gold. So next, I want to talk about, or rather the next one that I did my forecast is Euro against US dollar. So Euro dollar has climbed higher at the beginning of the week, but fell into a range for the last 3 days. As you can see, it went up and then it just ranged. However, managed to maintain a bullish structure while constantly finding support at 1.2170. The price is currently trading within a rising channel, and it stands above all moving averages, as you can see, right? So it is still very bullish, and it was noted that both manufacturing and services sector was on a positive note, with PMI readings all well above 50. But ECB president has reiterated its commitment to adopt its PEPP well into 2022, which is simply easing of monetary policies and printing of money. So this week we will continue to look for buying opportunities while expecting a deeper pullback towards the 1.2 psychological level should the price break below the current rising channel. Alright, so let's go right into the charts of Euro against US dollar. Right now, what we are seeing is that price has started to rebound off from the resistance and support level at 1.2170, which is the price that has been supporting the price for last week, right? Since it went to range. So at this point of time, if you are bullish on the euro against US dollar, we had somewhat like an inside bar formation, and now that we are seeing the price breaking upwards, so definitely I think we have a case to continue buying. But we also just want to take note that because this is a downtrend, although it's within a range, and right now it's pulling back, there's a possibility as it pulls back to somewhere right here, it may continue to go down. All right, so if you want to buy, I mean, this is what you have to take note of. And if you were to buy, definitely you want to aim at least at the previous high, and definitely you can go even higher, as accordingly to this riding channel that we have, all the way back to the top of the supply zone, and all the way to the top of the channel, whichever it is, and that will bring us back to the previous high in the beginning of this year, or January this year. So but if let's say it started to go down, okay, then we can try to find support again at the bottom of this entire riding channel, as well as some demand right here, because this is where the price breakout. So very straightforward for euro against US dollar. Unless it breaks out of this channel, then we might want to change our direction in the shorter time frame and wait for pullback, then to sell again. So that is if euro dollar breaks below this riding channel. All right, and that is for the euro against US dollar. And I think for today, if we look at the economic calendar of the tradingeconomics.com, there is nothing much today at all. It's not showing any news for high impact news. Whereas on Forex Factory, after retail sales, we actually still have the Bank of Japan, Kuroda speaking, and Bank of England, Bailey speaking. So that's in the US session or in the night. So that's what we can look out for tonight. Otherwise, today, as we can see, there won't be much volatility, as German bank is on holiday until the US session. We still have the Canadian bank as well, which is on holiday, but the US will be open, so we might just want to wait until the US session to plan our trade again. Alright, so that is all for today. Yes, I actually wanted to talk about Bitcoin, but I think we'll leave it for tomorrow.